For our next case study, sponsored by Clear Capital, please welcome Kenon Chen of Clear Capital and Rachel Robinson of Rocket Mortgage.
Hello, hello.
Hello, hello.
Put my little water down here. Hey, Rachel.
Hi.
How's it going?
It's going.
Yeah?
It's Vegas with the Westgate. Amazing.
We are here to talk about the riveting, sexy topic of appraisal. And when we looked at this for the idea of a case study, when I think about case studies, it's always been short, sort of 3 months of testing, and we see how it worked, and more of a short burst of things. But for appraisal modernization, this case study really is more of like a long-term test drive. When you have a car for 3 years and then you write your review 3 years later, that's really kind of where we're at, because this has been something that Rocket Mortgage, I think, has been leading the way on, and working together with us. So, we started this 3 years ago or so now. And of course, at that time, we didn't know that COVID was coming. Didn't know that we had this incredible year last year of lots of demand. But what made you initially start exploring appraisal modernization? And then how has that changed now that the market has changed in terms of its importance?
Yeah, well, it's a great question, Kenon. First of all, thank you so much for the opportunity to be here. I'm Rachel Robinson. I'm the Director of Collateral Policy for Rocket Mortgage, and have the pleasure of working with Kenon and Clear Capital on some of these new programs and products. And so, I think initially it was more just around this fundamental question of, wow, we've been doing an appraisal the same way for a real long time, and perhaps there's some opportunity to improve this a little bit, right? Clipboards, tape measures, felt like maybe we could get a little upgraded there. So I think it just was an initial concept of, okay, there's got to be a better way to do this. But then, as we got into last year and challenges with volume and fulfilling appraisal orders, I mean, many of us felt the pain of the 6 to 9 weeks before we can get that back, and that'll be $8,000. Thank you very much. So, that's a real problem when you have volume issues. We are in a different market now. And so you might say, things are better and we have faster turn times. And so that would be a very short-term view, because the reality is this workforce of appraisers is aging, and we are getting very close to the vast majority of them retiring with little to no backfill. So if we don't solve this problem of making sure that we have enough people that can complete the valuation skill set portion of the appraisal, and then helping to build out the workforce that can do the process of actually collecting the data, bifurcating that into 2 different workforces, we will find ourselves back in a similar world of hurt. So it's basically a necessity at this point.
So, and we saw some of those initial challenges, a few years ago, when we realized that, we did a time study and realized that we were seeing appraisers spend 30, 40 hours a month just driving in their car and not actually working on the appraisal itself. And so from a capacity standpoint, there's been, I think, arguments around, are there enough appraisers or not, or is it a capacity issue? And the question seems like the answer is both, right? It's both a capacity issue as well as a number of appraisers available. But let's talk a little bit about today's market, right, and some of the benefits and things that you're looking for to have a competitive edge. Especially when it comes to borrower certainty, right? We're in a purchase-driven market now. What's important when it comes to certainty for the borrower?
Well, I think it's probably obvious that the value component is the big question mark at the beginning of the process, right? We've gotten real good at being able to understand income and assets and credit and having certainty in the approval of the human and where they fall on the scale of, is this loan going to work, right? But the valuation piece of it still tends to have a lot of question marks, right? And so when you think about a purchase transaction, yes, the borrower cares, but so does the seller, so does the realtor. There's a lot of moving pieces in these transactions, right? And so, what we hear from realtors is, yes, we need to meet the closing date. That is important. But what is even more of a challenge is finding out that a value came in low in the 11th hour. The sooner you can know the answer to that question, the less stress it causes to the situation. It's already a stressful situation, right? Nobody wants a value to come in low. That's not the goal, right? However, when it happens, we need to renegotiate. And it's a better conversation to have that at the beginning versus boxes packed, moving trucks, trying to figure out where the kids are, right? It's just a real busy time. So I think it's helpful in interacting with the realtor community. All of that helps bring certainty sooner in the process and just makes a smoother transaction. We know with hybrids and with inspection-based waivers, which we'll talk about in a minute, that we, in general, can get those reports and completed faster and get certainty on that value faster.
Yeah, so let's hone in on that, because appraisal modernization is more than just any one particular product or one particular thing. It's this idea of, number one, utilizing a risk-based spectrum of options when it comes to appraisal. We've been in a world where there's been a binary set of options. Either you get an appraisal waiver or you go through the traditional process. And where I think it's clear that things are moving, with the leadership of the GSEs, is the idea that there's multiple options based on risk available. One of those being the idea of an inspection-based waiver, which is where a non-appraiser is actually doing the data collection, but you already have value certainty. So you have your waiver as you would have today. So you're good on the value, but someone still needs to go and collect data from the home, and they're using technology to do that. So it's not someone with a clipboard and a tape measure. It's someone utilizing a mobile device and actually collecting the home in a digital format and bringing it back. This has been, of course, in test and learn for a few years, but just recently, Freddie Mac actually brought this type of product to policy. It's the ACE plus PDR program. Mm-hmm. Let's talk about that a little bit. What does that mean for the way that you look at things in terms of appraisal?
Yeah, it's interesting. I think, the lending community is very familiar with the concept of a waiver, and it's a great tool to leverage because it gets us to that speed to certainty that helps really just smooth the transaction out from a collateral perspective. And when you think about the longevity of being able to offer those waivers, we can understand for the most part what's happening in market trends and pricing, but what we don't always understand is what's happening with the condition of the property and the consistency of the condition in the community, and all of those things inform the value, right? And so if we want to live in a space where we're continuing to leverage waivers where they make sense, the way we have to do that is continuing to collect data around the property condition. And so that information is going to continue to feed those models and perpetuate the longevity of being able to use waivers and expand the usage of waivers into the future.
So this is a different thing, sending a non-appraiser to the house. Let's talk about some of the challenges for adoption here. First of all, it seems like you can't work with your same appraiser workforce. So how do you think about vendor selection and the way you've had to rethink who's going to actually fulfill this product?
Well, it's interesting because there is an appraisal component that you need to think about, right? Because if you're going to end up being in the hybrid space or the desktop space, or you want to think about being able to have that appraiser workforce, but now we have this other component of, well, how do we go about collecting the data? And there are multiple apps out there, technology that is available to meet the data standards that the GSE is set to collect the data, but it's not just that, right? You need the humans to be able to do it. And, I think when we're thinking about vendors, it's that scale. It's the ability to accommodate the workflow and make sure that the folks that are interacting with our borrowers are, they're a representation of our brand, right, too, right? So is that the workforce that's going to be out there directly interacting? What does that look and feel like? And is it more accommodating to the borrower than maybe thinking about how appraisers have been in the past, right? Nobody wants to take a day off work to have to get the appraisal done. That's not fun. So now thinking about what kind of flexibility does this workforce offer, and can we do things that are different and meet our borrower where they're at and help to make their life easier? All goes into thinking about, who our vendors are.
Yeah. This is not Uber drivers then talking about.
It is not Uber drivers.
These are actually certified, trained people that know what they're doing.
That's correct. And competency is a must.
So in this current market, I mean, every deal counts. And change is still difficult, right? We were talking earlier about how, just fill in the name of the group of people, appraisers, real estate agents, the sales force, the loan officers. No one likes change, and it's hard to get people, especially large groups of people, to change and do something different. So what's important to think about when it comes to someone utilizing a product that's different, that might get the blame if the deal goes badly? So how do you think about that?
Well, it's funny because, I think about it from a risk perspective, so I'm the one staring at the data and all of that great stuff. But, that doesn't always speak, right? When people are comfortable with what they know because they know when it goes wrong, they know how to control that outcome, right? And so I think transparency into how everything's working, it takes education. Why isn't it an appraiser that's coming out to the property? And why do we feel okay with that? And it's so critical to make sure when you roll these types of things out that you have the education behind your sales force, the workforce, that you're working to educate the realtor community, the broker community, so everybody understands what, when, how, why. If you don't, and that deal goes wrong, or the value comes in low, or maybe everything went just fine, but it's not the outcome they're looking for, the first thing that happens is we blame the new situation, right? So it's so important to be able to have a great communication stream and transparency into the process so that everybody who's involved understands what's happening and why and feels comfortable.
Yeah. I love this idea of transparency for this modern approach where the way that the scope has been set up for these products is that the data is really digitized. It's not just someone doing some observations in their head or on a couple of notes written down, but it seems like the whole property in a way is being brought back to be able to look at. And because of that, if you see, at least with these different policies, we're seeing that there's now a shelf life, right, for this property data report or this property data collection where, hey, if this could actually be utilized later on to support other deals. So there's a lot of promise in the fact that there's a transparent data package that can live with this property. So I want to dive into a little bit. Whether the results have proved out. So we're just talking about a property data collection here, or a property data report, and not a full-blown appraisal. So what does that mean for the borrower? What are they experiencing differently?
Well, so when going back to what we were talking about and having that speed to certainty on the valuation, when we have these inspection-based waiver type programs, what you're seeing is answers on the value, the condition, the entire collateral package. Actually, more and more, we're starting to see those results in 24 hours.
Wow.
Being able to get somebody out to the property to collect the data and get it back in and reviewed is actually a relatively quick process. Now, like anything, we've got to scale this thing out so that we have the workflow and all of that, running at a fast clip. But I don't think that we are far away from being able to have this kind of value certainty in 24 hours on a repeat basis.
Wow.
It's pretty exciting.
I think you were actually on this stage 3 years ago, and you got asked a question by our president, like, what do you think the future of appraisal? What do you want, Rachel? What is it that you want? And what was your answer?
I want certainty on my collateral in 24 hours.
Oh my God, are we really here?
Yeah, we're here.
I mean, honestly, I'm kind of flabbergasted that this was kind of a coincidence that we ended up here together, today. And we've used that as a rallying cry over the past 3 years. When you said that, we want same day property approval, we want same day valuation, we're like, okay, we're going to go after this thing. And to see it actually come to fruition where this is now possible, that's pretty incredible. Just
put it out in the universe, Kenon.
So, I'm sorry, I'm just reveling in that moment for a second. So let's talk, about also the borrower, the cost to the borrower a little bit, because obviously homes continue to appreciate. Mortgage rates are up right now. Affordability is an important topic. What are we talking about here in terms of cost to the borrower?
I mean,
these types of products?
When we're leveraging an inspection-based waiver type of program, you're looking at a third of the cost of an appraisal. It's a much better outcome for cost, for time, and you think about cost from an internal review perspective from underwriting, right? And so when you're collecting a standardized data set and basically the reports look identical, we're eliminating this free-form text concept, right? It turns into, number one, a much faster, easier review for your underwriters. Two, the revision rates end up really improving dramatically because you're capturing the data the same way over and over. Oftentimes the technology can catch those errors before the submission even happens, and so it's no longer about this, let me send it to the underwriter, thanks for paying you for the thing, you're missing these 5 things, send it back, fix it, right? And so we see much better revision rates, much better QC, and we see that these reports end up performing similarly when we do end up with a hybrid appraisal to our 1004 appraisals, right? So from a quality perspective, from a risk perspective, everything, in fact, sometimes we see the hybrid reports outperform, so.
Wow. What's some advice you can give, other folks looking to, try this out in terms of how do you think about data, right? And measuring success, because as you roll these things out, you could have one product in one geographic area. It's not always an apples to apples comparison, right? So what's some of the mindset, I guess, for seeing whether something's working and not just dipping your toe in, but going for it?
Yeah, I think you have to take a market by market approach, and I think you have to be thoughtful that these types of products work better at scale, right? And so data collections are one component, and if you have a workforce that's only doing data collections, that works really well. You start to get into the hybrid space, now you've got to make sure that your appraiser workforce is doing only those types of appraisals, because the last thing you want is somebody, completing the valuation at their desk in their office, right? And then heading back out to go do a 1004 traditional appraisal. It doesn't work great that way, right? So market by market, you need to make sure you have the right approach. You also need to be flexible. If you don't have the right coverage, maybe that's not the right area to start. You may have to continue to do traditional appraisals by market until you get that scale built up and it's now able to run effectively.
Yeah, that's a huge point. The idea of keeping the same type of product and assignment funneled to people so that they can actually stay at their desk. You lose all of the scale and all of the capacity gains if you have someone kind of doing one or the other. And what we found is that if we can keep an appraiser at their desk doing desktop appraisals, whether it's part of the hybrid or just desktops, we're seeing 4 to 5 times the capacity from an appraiser. We had someone last year doing like 100 appraisals a month on our desk. So that means better turn time, but also I think consistency, right? So I'm going to ask you another challenging question.
Oh, okay.
So that when we're on stage 3 years from now, we have something that we can actually look back and see if we got there or not. But what does the next 3 years look like? Where do we need to take this thing next to actually really make a lasting difference?
Well, I think that you touched on it a little bit, right? We talked about having a data package that's reusable. And so the time-consuming component right now is getting out there and collecting the data. But if we don't need to make that dependent upon the transaction, and we can move that up earlier before we've even thought about a mortgage, right? And then reuse that package over and over, now we move to more of an instantaneous approval type of scenario. So
you're no longer happy with same day. Now it has to be instant.
No, I want instant.
Okay. Well, you heard her, and we'll see if we can pull that off here in the next couple of years. But thanks so much for listening. Appreciate it.